A warm welcome from my side. My name is Bill OACKER, and I am the Senior VC Advisor for Financial Services Technologies with a focus on the banking and payment industry. In today's video, I'd like to introduce you to DATASHIFT. DATASHIFT is a young company that completely disrupts the credit card industry. We all know that web commerce has shifted payments online and cashless. With that, our plastic cards are an essential part of life. Yet, there is still a lot of ambiguity on the actual processes that take place behind the scenes. This holds true as well for merchants who rely on credit card networks to offering cashless payment means. Let me make this already clear, there is lots of ambiguity within the industry, and almost everybody on the planet would love to see more transparency on transaction data within the credit card industry. Glad we now have DATASHIFT that I will introduce to you in a minute. I hope that you can still see me squeezed in my little circle. Technology is simply amazing these days, isn't it? Now I want you to turn to the other 3 circles below me. This is today's agenda. My goal for today is to introduce you to the problem statement that DATASHIFT is targeting, how their platform brings decentralization and a cooperative data exchange on the table, and, finally and most importantly, what DATASHIFT's platform actually does in order to dismantle and reshape the credit card industry. Let's start at the very beginning. The problem that DATASHIFT is tackling is deeply rooted within the credit card industry. It has been there for decades and is still covering the front pages of financial newspapers. I brought a recent article with me from the Financial Times Weekend. The author writes about the tremendous fees which are charged towards merchants for accepting in-person and online payments via credit cards. We are talking about a $160 billion market in payment fees in the U.S. alone. And guess what? More than 4/5 of those fees are incurred by credit card fees. Fees that the merchant has to pay, whereby she ultimately passes these over to the consumer. You and me. You need to get the following: the so-called scheme operators, you know them by the likes of MasterCard, Visa, or American Express, have constructed an environment in which they have achieved a sort of oligopoly. Or in different words, this is a pure form of centralization which is intentionally created by scheme operators. This enables them to charge ridiculously high fees, and in addition, their market has proven resilient in recent years to any intervention such as the surcharging mentioned in the article. Let me emphasize this again: credit card operators have created an environment whereby the transaction fee discovery is completely insulated from direct market pressures and free market forces. The underlying black box is called the interchange plus model. On the surface, we are simply talking about swipe fees or credit card fees, but the essential components this fee is consisting of are 3 Ys: interchange fee, scheme fee, and acquirer fee. Let me show you how this actually looks like in a simplified payment value chain. This picture shows an overview of how overall credit card fees are distributed among value chain stakeholders. Imagine if a customer buys a pair of shoes from a merchant for €100. The merchant in this case pays the credit card fees in order to give his customer a payment option. Let's say this fee is €2.73. The merchant only receives €97.27 for the €100 shoes. A small fee is charged by the technical provider of a hosted API gateway which is connected with the merchant's webshop in order to technically facilitate the transaction. We call this a payment service provider. In Cyprus, this is for instance offered by JCC. So JCC charges the merchant a negotiated fee, which is usually a blended rate to make things easier, but respectively has major cost inputs from the upstream side. These are for one, the bulk of fees going to the issuing bank, that is the bank who has issued the credit card and bears the risk of any credit defaults of his consumer. But the 78 cents are paid to the card operators, the ones who simply provide the connection between the issuing bank and the bank of the merchant, the so-called acquiring bank. That means that Visa charges 78 basis points for simply providing the technical credential that the consumer is having the funds for the purchase. You already notice, this screams for the utilization of blockchain technology. To understand the very pain point for merchants and consumers that DATASHIFT is tackling, I want to show that the overall focus is on the scheme fees. That are the fees paid to the credit card operators, thus the 78 cents from our previous example. In short, there is no way for anybody to trace down the actual scheme fees a specific transaction has triggered. The reporting standard here is one-to-many. Moreover, the actual fees are only calculated after a transaction has incurred and are therefore adjusted via intransparent mechanisms by operators such as the payment service provider with so-called true-ups. I give you an example. If you are a merchant and go through your transaction fee report, there are additional positions usually at the end of the months which are called true-ups. These are fees that you have to pay on top, although you have no goddamn clue for which transaction that has actually been. Now let's make this pain point even more clear by looking at the fees that might incur throughout the so-called payment transaction lifecycle. Refunds and chargebacks. Let's get back to our shoe example. After our consumer receives the shoes, he might want to return them since the size is not optimal. Well, what actually happens then on the payment side? The consumer will receive back his 100 euros. But incredibly, the merchant does not fully receive back the whole costs of 2.73 euros. The 78 cents of scheme fees are in fact not returned. Of course they are not returned since nobody has a goddamn clue what they actually were when looking at the transaction fee report. I am not kidding, this is current practice, and guess what? Scheme operators love this. Alright, now having talked so much on the payment industry, let's move to the more fun part. We learned that scheme operators intentionally create intransparency within the transaction data in order to make sure they will earn money each time a transaction is processed throughout their network. We can now think that this is something already been solved by the Lightning Network operating on the Bitcoin blockchain, right? Well, DATASHIFT estimates that the current penetration of credit card payments is not to end anytime soon. Hence, simply hoping an alternative payment network could solve the problem of merchants is not feasible in the near future. Why am I saying this all? DATASHIFT opts to build a cooperative platform for every stakeholder within the payment industry to exchange data in a regulatory compliant manner. Similarly to open banking initiatives and other payment standards, for example the revised Payment Service Directive 2 in the European Union, DATASHIFT fosters the open and non-discriminatory access to transaction data with the only caveat that DATASHIFT's platform is purely market-driven and hence does not need regulatory enforcement. In its essence, any value chain stakeholder is able to upload credit card transaction data to the off-chain transaction databases maintained by the Decentralized Validator Network from DATASHIFT. There are incentivization mechanisms such as the issuance of a governance token with revenue sharing to enforce transaction upload. The moment a third party can access the transaction data, any otherwise costly reconciliation and optimization services are made accessible to the contributor of the data. And here is the crucial role of DATASHIFT. Any third party needs an onboarding to DATASHIFT's platform by being adequately KYB'd. DATASHIFT will create verified credentials on the blockchain and thus give each party a decentralized identifier. The beauty of this is that any network participant is transparently revealed in a so-called federated catalog. This is current standard as handled for instance in governmental projects such as Gaia-X. This renders the whole platform decentralized, credible, and regulatory compliant. With this decentralized infrastructure, credit card fees become apparent and will be published on DATASHIFT's platform. In that way, any third party that could request specific transaction data from any merchant that currently has a credit card transaction to be processed could easily be exposed to market equilibrium forces. This means that any third party could opt to process the transaction for a lower price than for the one that is exposed on the blockchain, for example by rerouting the transaction on an alternative payment channel. Think of this as more efficient transaction routing. The illustration shows the current target architecture picture from the developers at DATASHIFT, and to be honest with you, I have no idea what it actually states. But gladly, I do not really have to fully understand what all this blockchain-based and decentralized identifier infrastructure is all about. But I tell you something I wrote down on my notes. DATASHIFT will operate a cooperative communication platform based on decentralized identifiers, data registries, and off-chain transaction data stores in order to facilitate the data exchange between merchants, payment service providers, issuing and acquiring banks, without consumers having to switch their payment method. Cooperation, from the very beginning, which implies that credit card networks would not be rendered obsolete, but improved in a way that transaction fees are diminished. And all of this based on DLT technology. To make sure that you understand this rather complex platform model that is offered by DATASHIFT, you have to think of business-to-business software as a service platforms. I will give you a very specific example. Let's say there is an incoming credit card transaction from a merchant. Instead of the traditional flow by seeking the authorization request from the scheme network, the merchant exposes the transaction to DATASHIFT's platform and thereby to all onboard third-party providers. Any one of the latter is able to claim this request by offering a lower scheme fee than the ones being charged by the credit card operator. Note that the fees are transparent and visible to the public based on past data. In that way, scheme fees are being exposed to direct competition and will ultimately be driven down by free market forces. This is a win-win for all. If such an infrastructure is in place, the use cases that can be built upon are endless. So the platform that DATASHIFT provides could be regarded as an ecosystem whereby any third-party provider can opt to offer a specific service. At the same time, any underlying access to transaction data is monetized by DATASHIFT and partially redistributed to the originators of the data. On the picture, you see an overview of prioritized business applications the DATASHIFT team would love to see emerging soon on their ecosystem. Let's take the transaction marketplace for instance. Having a successful and authorized credit card transaction could be easily bought immediately by a factoring company in order for the merchant to receive a predefined and lower fee than currently. Or a DLT-based foreign exchange settlement that renders currency conversion cost for the merchant obsolete. We can also think of more efficient transaction routing that third-party providers would offer for lower fees. You see, all this would lead to more efficient price discovery and yield to more market equilibrium in credit card fees. Alright, I hope I could have shed some light on the particularly challenging platform mechanisms DATASHIFT operates. Do not be shy in contacting the team for any queries, they are keen to talk. Also, please see additional information the team has added to the post below the link for this video. You will find a comprehensive abstract as well as a poster that further explains what this is all about. Thank you for your time and hope to speak soon with you. Have a nice week, your Bill OACKER.